China for a long time has been revered as a miracle. It's been lauded over as the ideal way to bring a nation from what can only be described as a backwater into a fully fledged superpower and the second largest economy the world has ever seen. Those of us in the West have for years been watching with awe as the country's economy seemingly defies all logic and expectation by growing and growing, even when all the odds are stacked against them. But there have always been skeptics and those who didn't quite believe what they were being told about China, and for good reason. Let's not forget that this is the country that gave us the Great Firewall, an entirely separate Chinese internet which doesn't have any of that pesky free speech that we love so much over here in the West. But those skeptics who never quite believed in the Chinese miracle had for a long time had nothing but their instinct to go off. Of course, the CCP control all the data that we get out of the country, so it's nearly impossible to actually see what's happening behind the scenes, or at least that's how it used to be. Over the last few years, an economic researcher has been calculating the true size of the Chinese economy using data that even the Communist Party can't hide, and the truth is that China's economy is 40% smaller than we all thought. So what exactly is this research paper, and why does it suggest that those who never believed China's claims about their economy were right all along? Well, it's titled, "How Much Should We Trust the Dictator's GDP Growth Estimates?" and its premise is pretty self-explanatory. Dictators and authoritarian governments often have complete and total control of a country, including all the data and facts about the country that are never published. They usually limit free press and severely disincentivize pesky little things like journalism and the exposing of government corruption through the usual methods of torture, imprisonment, and murder. As a result of this, many people, this researcher included, have always wondered just how accurate the data that these authoritarian governments publish is. To work this out, the researcher used satellite imagery of 184 countries at night with data from the last 3 decades to determine how much light was being given off by cities and the rate of change of that light as these countries grow in size. The principle here is pretty simple. When economies grow, we see more light pollution in those countries. We see cities get larger, we see them get denser, and we see them get brighter as well. We also see the brightness of these cities grow at a consistent rate that matches various other countries. If the United States, the UK, France, Australia, and Norway all claim to have grown their economy by 3% over the last year, then we would see all those countries and their cities get brighter by the same amount. The reason for this is quite simple. The data coming out of these countries is reliable. It usually comes out of organizations that aren't actually under the direct control or influence of the government. And even if a government did try to manipulate the data, well, there would be roughly 1,000 journalists ready to immediately publish everything they could find about the cover-up and expose it, because these countries all have free press and the right to criticize the government. As a result of this, these countries use real data, and frankly, they don't lie about their GDP growth because, well, they just can't. The researcher, though, found a pretty glaring trend here when it comes to some less than free countries around the world. Open countries, democracies with free speech and reliable data, were seeing a far smaller rate of change when it came to light pollution coming out of a country. In short, if America and China both claim to have grown their country's economy by 5%, well, America's cities would have actually gotten much brighter than China's cities. This, of course, doesn't just apply to China though, it applies to autocratic countries of all different kinds, from South American ones to Middle Eastern ones, and of course Asian ones too. Now, I know what some people will say, that this doesn't account for the faster rate of urbanization of certain countries over others, that it doesn't account for how much business activity actually goes on at night in various countries and cultures, and that it doesn't account for the different industries that make up these countries and the amount of light pollution that they produce. Except this paper does account for all of that and more, and yet still, these are the results. The doctrine of data from autocratic countries is so substantial that on average, those countries will overstate their GDP growth by about 35% every single year. That means if China claims their GDP grew by about 5% last year, well, in reality, it actually grew by just over 3%. So that small 2% change in real data every year compared to what China is claiming now has led to the entire Chinese economy being massively overstated to the point where common knowledge would say China's economy is currently worth about $18 trillion, putting it just behind the US at $23 trillion, but far ahead of any other country in the world, with Japan taking up third place with $5 trillion. This evidence, though, suggests that China's economy is not $18 trillion as the communists will claim. It's not $16 trillion or even $14 trillion. It's not even 12. It's actually just under $11 trillion, less than half the size of the United States. This data also means that China's GDP per capita is also wildly overstated, sitting something close to $7,500 per person, way off the $12,500 that the Communist Party claims it is. China's economy is 40% lower than they'd like us to believe. This means their debt to GDP ratio is far higher than we used to think, and the Chinese state is not nearly as efficient as many people thought. It means that when the Chinese housing market crashes and $1 trillion worth of wealth is wiped out within a month, that's a far more damaging figure. It means that when we see COVID lockdowns in Shanghai, Shenzhen or Beijing, and we hear that GDP in those cities has been cut by $10 billion, that's actually a far bigger piece of the pie. None of this is good news for China at all. I'm sure there are some out there who will still seek to spin this in some way to claim that it's all a glorious ploy by the CCP to cause a misallocation of resources from the West, but in reality, it seems like this is just the result of gross corruption on an industrial scale that has thrived for decades without an end in sight. We're already seeing people hail the end of the Chinese miracle, but maybe in a few years, I won't be alone in saying that there never even was a Chinese miracle, only a Chinese mirage. Investing has never been so difficult, and we all know it, especially with these problems in China over 2022. Stocks are about to close an awful year, bonds have dropped in price, gold has floundered, and real estate is on the brink of collapse. But there is a shining light in the form of alternative assets that isn't getting enough attention, and that's where this video's sponsor Masterworks comes in. They help you to invest in fine art for the first time ever through fractional ownership, bringing this asset class into the reach of normal people and not just billionaires. As of right now, they've sold 9 pieces of art for an average net return of 25% to their investors, and this is throughout the market turmoil that we've seen over the last couple of years. They've performed so well for their investors that there is now a waitlist to join their platform, but you can skip it by clicking the link in the description of this video, and Masterworks are also working overtime to buy and release more art on their platform to meet your demand. I've been working with them for over a year now, and it's great to see so many of my subscribers join them and make great returns with Masterworks, so go on ahead and join the thousands of other Stoic Finance subscribers and skip the waitlist with the link down below in the description. Now, a lot of people might be sitting there and thinking and asking, why has China lied about all this, and haven't they just dug themselves a massive hole? Every time they lie about GDP growth, the real figures and the fake ones get even further apart, and the chances of silently fixing the issue get smaller and smaller. Now, that is true. This is a problem for the CCP, but it isn't a pressing issue, and it probably doesn't even scratch the top 100 things that the Communist Party cares to fix. Frankly, they're happy to have this overstated GDP figure because it suits their governance style. Chinese citizens will never get a chance to watch this video. They don't have access to YouTube or Twitter, and they don't have access to the academic journal that this research paper was published on either. It's not like these figures actually mean much for the average person on the ground either. Whether my government tells me the GDP per capita of my country is $10,000 or $10 million, it won't actually change my income, my quality of life, or anything else. What it will do, though, is change my perception of the government. If I hear how the US is growing at 3% a year and Europe is growing at 2%, but China is soaring ahead at 7%, well, without anything to suggest otherwise, I'm going to believe that claim, especially when no other government or organization seems to care what the Chinese Communist Party is claiming. These inflated figures allow the CCP to claim that they're effectively governing the country, driving prosperity and making people wealthier, even if they're not. But this does actually go a bit further than that as well. An element of this overstating of GDP figures won't be coming from the party leadership, but from those who run regional governments who are so zealous in their desire for promotion that they're willing to lie about their figures to the higher-ups in order to increase the likelihood of them climbing the Communist Party ladder. This happens constantly and all across China, and so it's become a problem on its own, whereby even the Communist Party themselves don't necessarily know the accurate GDP figures. Now, some may be asking, why has it taken so long for this reality, which millions of people suspected, to come to the surface? Why have our governments just sat idly by as our economies only grow at 2 or 3% a year, as China laughs in our face, posting figures 3 times that? Well, there are probably many reasons, and for most of them, I suspect that we, the normal people that make up our countries and don't have any government connections, are just never going to know. But there is one idea that sticks out to me, and it's the idea that Western governments want China to seem big and bad and scary because it makes their political lives so much easier. Are you worried about how to convince your citizens to pay their taxes? Well, maybe our governments are happy to point out how aggressive China has been over recent years and how they will soon be the largest economy in the world and that we need to fund our militaries to combat them. Are politicians worried about backlash from the pollution our own industries are putting out? Well, maybe our governments just subtly point out the size of the Chinese economy and make it clear that in comparison to that behemoth, our sins and transgressions hardly even register. Now, that is a rather cynical take, and I'm sure indifference plays a part in all of this as well, but it's something I do think is likely to be happening here as well. Now, it's almost cliche to mention in this day and age, but GDP really isn't the best or most important figure to look at when trying to determine the wealth of a country or how well it's doing. It notably doesn't take into account purchasing power or quality of life for citizens or literacy rates or literally anything else like that. But there is one other massive glaring issue with GDP that most people don't really mention. There's an old joke in economics about 2 economists who are walking along when they find some dog poo next to the path. The first economist says to the other, "I'll give you $1,000 if you eat that." They stop for a moment before the second economist bends down and eats it and quickly takes his $1,000. They continue walking before the first economist says to the other, "You know, I gave you $1,000 to eat dog poo, and then you gave me back the same $1,000 to eat dog poo. I can't help but feel like we both just ate dog poo for nothing." The second economist quickly retorts, "That's not true. We increased the GDP figures by $2,000. Now, I won't blame you if you think I've gone mad with that story, but the point is that GDP figures alone don't define productivity or wealth. If the Chinese want to increase their GDP by $1 trillion, all they have to do is build a $1 trillion bridge. It doesn't matter if it goes anywhere, it doesn't matter if it gets used. All that matters for it to count towards the country's GDP is that the $1 trillion is spent. In this sense, Chinese GDP figures have always been a misnomer and a non-factor. They truly do build bridges to nowhere that simply don't get used. They build railways that stretch off into the desert and carry trains back and forth, but with no people on board, and they build apartment blocks with no intention to ever house anyone either. This all counts towards the country's GDP figures and is simply financed by debt that will never be paid off. Of course, this doesn't mean that the outright fraudulent data on the Chinese economy isn't important. It really is. It has a direct impact on the average wealth and value of a Chinese customer. For years, businesses have pandered to the Chinese market on the idea that the economy was growing rapidly, that each citizen was well on their way to being as valuable as someone in the US or Europe before long, but this data shoots that idea dead. Far from being a middle-income country, China is actually in the poorest half of the world, ranked as something like the 120th richest country in the world, about as wealthy as Bolivia or Guatemala. The Chinese miracle was really just a product of a quickly urbanizing population flooding into cities and giving the illusion of massive economic growth, combined with an absolutely massive population more than 4 times the size of the United States. It wasn't a Chinese miracle, it was a Chinese illusion. There are tech companies in China that gained hundreds of millions of users, not because of the competitiveness of their innovation, but because the Western companies that they copied were illegal in China. It's a domestic market attractive enough to draw in companies from all over the world, not because their citizens were wealthy, but because there were just so damn many of them. There's this idea going around that the 19th century was dominated by the British, that the 20th century was dominated by the Americans, but that the 21st century will be dominated by the Chinese, but the evidence just doesn't support that kind of idea. When you peel below the surface, we see a cracked, weathered and dreary Chinese economy staring back at us, one that has been pumped up with helium to inflate its apparent size, one that has been building railways and bridges to nowhere, all in the name of the creation of jobs, and one that is seeing a population collapse on a scale never before seen in history. At this rate, and if this paper is even remotely accurate, not only will China not rule the world, it won't even go on to rule Asia. It should be pretty clear at this point, there's an awful lot of fraud when it comes to China and their economy, and this really isn't surprising. But I am determined to make sure that you stay up to date, to make sure that you know when these sort of developments happen. So make sure to click that subscribe button, like and comment the video to make sure it hits that YouTube algorithm, gets sent out to more people. And until next time, stay stoic.